It's a working. All is working good. Yeah. Hey, welcome to the closing beat, everybody. Happy Tuesday. How's it going out there? Started a little early today, so there's people trickling in there. Hope all is good. We have got a lot to cover today. We are going to be talking about some stats. We're going to do an advanced lesson in here. We're going to show some forward performance. The stock market, is this a bottom or not? We're going to go over all kinds of good stuff because, well, I got bored. So I like to do that kind of stuff when I'm looking. So I do want to point out that this, the Wine and Wealth, so every Thursday we do a class for clients where we talk about getting your dough straight in any kind of unique way that we can. We're going to start thinking about money a little bit differently here. And so we're going to go over some very unique ways to get you to think about money differently, some different strategies, right? So not just like motivation, rah-rah stuff. I'm not good at that, but we're going to go over different things that we've done that are really unique type strategies for clients that maybe make it, you ask a question, spark something in you that goes, okay, yeah, maybe I could try that. Of course, I'm here to help, and so is Eric and everybody else. But we're going to go over that. In our notes from Jazz this weekend, we talked about the market bouncing, talked about specifically why, and so far that is the case. So that was pretty promptly timed. I like to see that. And if you're not a client of Jazz Wealth, we're the advisor for just average people. You don't have to be rich to work with us. And we treat everybody as if they have the same dollar amount. So there's no, you only have a little bit of money, we can't help you sort of thing. There's something for everybody to do, and I like when we find things like that because, the average person needs that help. How are they supposed to be wealthy if you don't have, help that person? The wealthy people get all the tips, so we're bringing that to you guys. Anyways, jazzwealth.com if you want to check it out. Let's get started. Here's the S&P on the charts. I'm using S&P futures, and we're going to talk a little bit about futures here today as we get into oil and the such, because there's something interesting happening there. We're looking at potentially, well, at least a short-term bottom in the market. Now, I should tell you, and you probably already noticed, that bear market bottoms, whether temporary or not, tend to be violent. We saw that here, we saw that here, we saw that right now. We've seen that in every opportunity for the market to try to put in a bottom. It's a violent swing higher. What does that do? That makes you think, oh my God, there's the bottom. I better get in. We're going to go back to all-time highs. I'm going to miss out. This is going to be horrible. I'd rather you think of it a little bit differently. Realize that the bottom is violent. They tend to be. And that this is your opportunity to measure the next pullback. It's not going to go to all-time highs without you. That one's pretty much a given. So you go, okay, cool. People wanted to buy here for some reason. They think the Fed's done raising rates. I don't know. They haven't said anything different. I shared that with you yesterday, all the comments they've made. So now's your chance to go, okay, cool, rally. And when we pull back, I'd like to see if we barely pull back, if we aggressively fall and wipe out like all of one of these big gigantic days here, or maybe chop sideways for a while, right? That's your chance. That's when, now you go on and build your shopping list. Now is not the time to dive in and chase everybody else. Whatever you have, just enjoys the bounce, and that's all good. Now, speaking of bear markets making violent bottoms, when the eventual bottom happens, what I did is I looked back at every single bear market in history and said, I want to know the day of the low, what was the reversal? How big was it? I know it's supposed to be violent, so let's prove that point. And was it an amazing big time day? Well, let's take a look. If we go over to the slides here, this is the official performance of every bear market low. As if we knew it was coming, we'd just pretend like we could go back in history and say we knew that that was going to be the low, because obviously we know now which is the low. So here's where we stand right now. Yesterday's gain 2.98%. If that was the bear market low, it was below average in terms of a low, right? We have yet to see a reversal day that is at least average, about 4% in there, that could signify the bottom of a market. So maybe there's more to come, maybe there's not, I don't know. But here is every single scenario. So in October 1931, you can imagine what was going on then if you studied the markets at all. The one-day performance that marked the low was 12.36%. The bear market through COVID, the one day in March that marked the low was 9.38%. You could see each one that we put there. So this is impressive. It's just not above average. There's not a solid stamp by the bulls to say, bam, that's the low. We're interested. We're not going to look back. So I think that leaves us open for room to think about the next pullback. Think of it that way. That was what I was saying a second ago. Think of the pullback as your opportunity, not as trying to guess the low. It's the same on breakouts. You ever played a breakout? Like look at Brazil. I was going to talk about this a little bit, but we'll just dive into it. Look at Brazil breaking out from its highs. If you don't know, Brazil is hands down the best performing market of the year. I think it's the only positive market around the world at the moment, year to date. They're killing it. Everything in Brazil is just killing it right now. Markets are doing incredibly well. Well, it's breaking out. So sometimes breakout traders will buy the breakout and try to guess right there, get right in at the very best price. Other times, breakout traders will say, let me see the breakout and let me see how it pulls back to make sure it's not a fake, right? Maybe I'll pay 1% or 2% more, but if I know I've found a nice pullback, that means I can enjoy the same rally, hopefully, that comes that everybody else was going to participate in as well. And oftentimes, if you look at a breakout, it pulls back below what the breakout entry price would be. So it's a favorite strategy of breakout traders. Anyways, I want you to think of the markets the same way. Maybe we have a low, maybe we don't. When we see the next pullback, is there fear in the streets? Does it come because of the Fed's rate decision next week? What happens that causes this pullback? And is it sort of mild or is it more aggressive like we've seen on the rest of these? See that day right there that erases that whole big gain that we had? That's what we don't want to see if we want to buy that pullback. Now, we're also heading into a better part of the year. Sorry, you couldn't see the charts when I was pointing there for a second. This is the average performance of the Dow over the last 20 years. I share this with clients all the time. I've shared this with you before. I was looking back at some old slides that we had here. And we know that September is a rough one. I've shared that with you guys as well, that the September tends to be rough. We're going into a better part of the year seasonally. Doesn't mean it has to be positive, but we're already well on track to do that, right? We've more than beat the average just in the first 2 days of the fourth quarter. So when we look at October, we expect to see a little support, right? We're going into the midterms and all that, so it could be a little different. I shared some stats with you on that. But we're going into that time period where the market tends to, the bears tend to, back off a little bit. And so if we see a bounce, considering that we're also oversold in the same respect in many sectors, like I reviewed yesterday, are way oversold and due for a bounce, well, that puts up a nice little recipe for maybe a year-end kind of rally that helps us all feel good around Christmas time and Amazon Prime Day and Black Friday and all that. Maybe we go spend money. I don't know. We'll see how these things go there. Okay, so that's the S&P. If you look around the S&P, well, 98.4% of the entire S&P was positive today. I did want to point that out. All the big oversold names, you're going to look at the tech sector. The tech sector is 23% of the entire stock market right now. And so when that has a good day, it's pulling the market with it, right? So you had names inside of there like Microsoft. There you go. Big bounce off the bottoms for Microsoft there. Both classes of Alphabet shares also trying to come off of lows. Amazon with their new Prime Day coming up there, up 4% on the day. And you got to point out Apple because these are the biggest contributors to the S&P. They make up over 25% of the S&P. Throw NVIDIA in there as well. And, it's trying to come off of its lows. You got a decent day. You got to mention Tesla as well, recovering about half of what it lost yesterday after its vehicle sales because apparently, which, by the way, this was the best performer in the S&P today. Elon Musk is hoping to avoid the trial, go through with the deal at $54.20. And so the stock closed right at 52. I think it was halted the majority of the day here and there. Looking around, you got financials, big bounce off lows for financials. What does that mean? Right? Remember, financials have been moving lower as rates have gone higher. So rates higher are good. Comments that the Fed is not going to cut rates or not going to, maybe they're going to stop raising rates, that's good for them as well. Why would that be good? So financials should do better when rates are going higher. I would agree, and they do. As there's a direct correlation there, it's like 81%. So great, that's fine. When the Fed raises rates too fast, well, it's good for banks, but only if people are willing to borrow. When rates get risen really fast, then people go, I'll hold back. I'm not going to go get that mortgage right now. I'm not going to go spend that money on a new car. I'm going to hold back and see if rates come down. Well, then that's bad. So even though rates are going up, people pull back on their spending or their borrowing. And what you have is the banks going, we can make a bigger margin on this loan, but we don't have as many people coming in to do that. So we want rates to go up slowly for banks. And the fact that maybe the Fed may start slowing down, it's good news for them. We can digest the higher rates. People get comfortable with that. And maybe even prices will come a bit lower. One can hope anyways. All right, moving on. Let me go over to energy here real quick because We got another 4% gain for the second day in a row. It is the best performing sector in the markets there. The reason why, you've got crude oil up another, well, let's call it 3.25% on the day, maybe turning around, putting in a bottom here. What you have is OPEC, yes, over the weekend, considering doing a 1 million barrel per day cut. Well, now there's talk of that being even more. What's really going on there? This is going to be a bit of an advanced lesson. You may have to do some Googling here if you want to learn some more of this here, but they're trying to get investors back from the dollar, right? So if we just use an ETF and look at the UUP, see the money flowing out of the dollar? Where do you think it's going? Oil. And now today we have confirmation that they are actually trying to suck those people out of the dollar and put it in oil, get some support in oil there. The reason that is the advanced part. Oil is what's known as being in backwardation. And if you're an oil futures trader, all that means is the contract that's the most current, which most people participate in, is valued at a higher amount than the contract that comes up next. Oil futures do expire and you have to move your contract from one to the other. Well, if you're making a bet at something that costs $65 and time is up, you need to move that bet and you're moving it to something that costs $60, where'd the 5 go, right? You changed your bet. You had $65, let's just hypothetically, you had 65 committed, and now to continue the trade, you only need 60. That means you got to keep $5 whether you made a profit on that or not. Let's say price stayed flat. Well, what if time runs out there and you need to move it forward? And now you only have to pay 58. That's what backwardation is. It means that you're allowed to continue the trade past expiration and it doesn't cost you any money. So theoretically, think about this. We're going to talk a strategy here in just a second. I did some strategy stuff with you over the summer. Think about this. If you bought the current futures contract, I don't know which one it is at the moment. I look at the rolling contract, but let's say you're in the front month futures contract and it didn't move at all, meaning no profit, no loss. It just stayed there. Oil didn't move at all. That means when time's up and you roll it forward, you get a credit for moving your trade. And then let's say it didn't move again and you had to roll forward. You get another credit, we're assuming, you get another credit for holding the trade. Then you roll it again. You get another credit, another credit, another credit. Do you know that oil right now, if you hold the oil futures contract and just do that, do you know that that's an annualized return of 24% just by holding it? It can go up or down. It doesn't matter. You're making 24% whether you like it or not. So that's something I would never do a YouTube video on because somebody would be like, oh, you're not understanding this. And then I'd have to be like, you're not understanding this. And then it'd be this whole thing. And you know what I mean? So that's where it stands right now. That's not an opinion. That's not my belief. That is an actual fact. So what do you think the big money investors are doing right now? They're just buying oil. If they're short, they're covering oil because it becomes really expensive to short oil contracts. It's the inverse. You would essentially have to roll that contract forward and pay the $5. So now it's another debit. So it becomes really costly to try to keep that to the tune of 24% a year if you annualize it out. So if they cut 1 million barrels a day or a little bit more, whatever it may be, then you have a recipe for an easy trade for big money, a place where people can park money and essentially think of it like a dividend. It's not taxed the same way, but they think of it as a dividend. And I'm going to get 24% just to sit here. And if oil goes up, I'll make a few bucks on the gains as well. All right, right? So that's a huge thing there. Like I said, it becomes really expensive to be short, so you have less short participants. You can already see that in the Commitment of Traders report. So more expensive to be short and really expensive to buy put options on the futures contracts there. That's way off base what we normally talk about, but when I saw 24%, did the math on that, I'm like, okay, we're gonna talk about that, right? Somebody out there is gonna be like, I didn't know that. I'm gonna go make some money. So that's what's going on in the crude oil market. And so the OPEC meeting tomorrow will most certainly cause volatility because they're going to make their decision tomorrow, I believe, which will be kind of overnight for us. So anyways, that's what you have going on there. And that's why people are saying, oh, well, then I'll just buy energy stocks, right? They should do better. Everything should go up. It'll be fine. That's why I'm buying the oil explorers, right? The different ETFs you can use, or saying, well, I'll take the 24%, just park some dollars there. Margin, if you're on margin, it's less than that. And you go, well, great. If oil goes up, I'll make a few dollars, but otherwise I got essentially, it's not arbitrage, but essentially a reason to move money from the dollar, which is where all the money's at, right? now, to oil. So anyways, just a side topic there. Let's move on to some other stuff here because I rambled a little bit. Sometimes I do that. These things happen. If we look at the sector performance, let's say you go, I don't know what he just said. This is something else, right? Let's go towards something simple. Well, this is going to be a little hard to see. I'm sorry for that. We're just trying to show it in a different way, and maybe it works. Here's the performance of each individual sector going through the rest of the year, right? I'm not telling you that's what's going to happen. I'm saying historically, right? We know we're going into a good time of the year where the market's going to move higher. Why does the market move higher? Sectors are moving the market higher. There's 11 sectors that make up the S&P. If some of those start moving higher and they're weighted heavily enough, the market goes up, right? So if you want to drill down, you look into individual sectors. I'll rattle off a few because you probably can't see the numbers there. Tech. Well, that's important. We know tech accounts for basically at least 1/5. It's somewhere in the 22-24% range. So tech's average gain in the last 3 months of the year, 8.61%. Materials. We've been talking about materials, man. People are excited about materials right now. It's not a very exciting sector, but you got to look in that one there. 8.38%. I'll point out healthcare because that's one of the stronger sectors, not known for being an outperformer, but that's a respectable return for the rest of the year. Also, if you go down, let's go back to tech here. So what you see up here is 8.6% average return for the next 3 months. And then down here, go all the way down, that's the percent of time that it's positive over the next 3 months. So 81% of the time, it is positive through the end of the year by an average return of 8.61%. So what I was trying to do is just highlight some of that. Your best odds are in the consumer staple space, right? 88% of the time positive by about 6% as an average. Look at all of the ones in the 80s there: consumer discretionary, financials, industrials, materials, and tech. So if you're a sports gambler, you can attribute odds to some of your decisions. If you're an investor, you kind of want to know what's on your side and what you're fighting against and everything. If your big idea is to invest in real estate for the rest of the year, and you believe wholeheartedly in that, you better hope the odds are working with you in this, or working against you in this case, because the odds are about a 50% chance that you're going to average a 1.45% return. Do you think I'm the only one that knows this? Right? I like sharing it with you because I like stats, but you think that people that program the algorithms at Goldman Sachs, JP Morgan, Bank of America, Susquehanna, all these places, do you think they go, in the last quarter of the year, we should focus on real estate? No. It says, in the last quarter of the year, let's look and see what historically performs the best. And you notice money moving towards that. So you got to keep that stuff in mind. Just something interesting to share with you. Okay, one last thing before we do stocks in the news, because I had a lot to share with you today and I want to share it. You remember over the summer, around my birthday, we actually shared this with you here, that there's a strategy that investors like to use, not really day trading, this is investors, that says when we get to the halfway point throughout the year, take the best performing sector, compare it to the worst performing sector, and when there's a wide spread between the best and the worst, we want to make a play. And I was sharing with you that at the time, energy was the best performing sector, and by a wide margin, you had consumer discretionary being the worst. Look at the spread between the two. All the other sectors fit right there kind of in the middle. Energy was up 60, consumer discretionary was down 25. So then we went through the study of saying, do you want to buy the best sector and assume for more returns, or do you want to buy the worst? And so I shared this chart with you here. Can you tell I was cleaning up my charts last night? And I was like, ooh, good stuff. So we actually found out that it's better to buy the worst sector, to be the discount buyer, to take a little more risk if that was your case. Over 3 months, 12%, over 6 months, 6%, and that's compared to buying the best sector being 2% over 6 months, 3%, you get what I'm saying. And we said, if you're into that short to intermediate term type investing world, then you're going to want to focus on the worst sector, right? If you're a long-term investor, it really didn't matter. You were going to be fine anyways, the rising tide lifts all boats, as they say. And so the longer you went out, the tighter this spread got. But realizing that people were trading a lot lately. I said, well, let me share this with you. Where do we stand now? What happened? Now, it's not the end of the year. It's been about 3 months, and so it's just something to check in on. Here's what we have. The blue line is still exactly where we shared the chart with you through June. That was the spread. For a moment, it looked like energy would have got you. Like, oh man, I should have bought the best sector. But what happened in reality over 3 months, energy fell, and it's not a lot, but you've got a positive return in consumer discretionary compared to over the summer, right? So it is working out. It is holding true that strategy that people like to use, in fact, was worthwhile, right? Now, I would argue that market weakness probably put a damper on what this could be or could have been, but who knows where we go from here, right? So it could be better. Anyways, I just like to follow up on stuff like that. It doesn't do me any good to just spit out stats if we don't go back and say, well, what happened? Did it happen this time? Did it not happen this time? And what are the stats going forward? No, let's go over here. Stocks in the news. And you can see the charts. Yeah, look at that. All is good. Well, you probably heard about the Twitter thing. We already kind of talked about it. But so a couple things for Twitter. Obviously, Elon Musk with the $54.20 offer, he's saying, look, let's drop the lawsuit. Let's not go to trial. I'll just take it for $54.20. And then there was also what first came out was there was a former employee that said, I'm going to testify that the artificial bots that are on the platform is actually a larger problem than what Twitter had led on to be. So I don't know, who's doing what here, but it appears that is the offer that's on the table. I didn't catch a deadline or anything on that, but more drama to come. All right, Micron, along with others, by the way, Micron says we're going to spend $20 billion, which basically $1 billion a year. I wonder where they're getting that money from. CHIPS Act. To build a factory in New York. We'll have about 9,000 jobs. It's going to be great. There was a comment made by Chuck Schumer that said, we encouraged Micron to move to New York because of access to water, access to available land, and access to me. Right? So, little political game happening there. But nonetheless, Micron says, thank you, government, for giving us $1 billion a year, essentially. We're going to spend that $1 billion in New York to build a chip plant, as the law had asked them to do. We'll see what happens. What else do we got here? Meta in the news there. They're going to cut back, I think Bloomberg was the one that broke the story, but they're going to basically do a hiring freeze, right? In New York City, where they were trying to expand, the whole drama there with AOC and everything that happened in the past. They said, we're going to stop that for a moment there. They got to do something, man. It's getting tough over there for old Facebook. Meta, sorry. Rivian says, guess what? We're going to make 25,000 vehicles. We're on track to make 25,000 vehicles. And the stock is up a lot on the day, but does that move the needle and get it back to $100+ a share? No, I'm sorry. I don't think it does. And Welltower. Oh, actually, finished down on the day. They said our third quarter estimates are coming in below expectations. And that was all I had. There wasn't a lot to focus on there for you. I'm sorry. So that's probably why that stock didn't end up bouncing on the day. Not much for earnings. Yeah, not much earnings. Tomorrow we've got one Fed member speaking, and particularly we'll be speaking about inflation, the speech that he is giving. So that might have get a little attention, but that's basically all I got. I will take your questions if there happen to be any there. Hopefully you enjoyed the lessons here today, and we'll see where we go from here. You think Meta's a value play? Yeah, I mean, they're not going anywhere, but I mean, it's kind of like SoFi, where they're doing amazing things there, and they're going to be really competitive, but they're taking that approach of every dollar, basically, should go towards our efforts. And instead of saying, like, we have money to pay out or do dividends or anything like that. They're basically saying every dollar is going to go towards our efforts, and we think it's going to pay off. Well, you're making the bet now that that'll pay off. It's kind of like Rivian. You're assuming they're going to go 25,000 cars this year, 77 cars next year, and 150 the year after, or maybe something better. But boy, if that doesn't happen, you paid this for what was eventually going to be the growth, right? So you're paying today as if that's an operationally superbly excellent execution, and that's as fancy a words as I can use for you. Yeah. Rivian's a play in the long run. Well, it's good timing on that one. So just gave you the comments there. Glad that helps. It's a tough industry, especially when all the big boys now are throwing their hats in the ring. I saw Chevrolet change their logo to Chevrolet, so the EV is real big. You know, you don't do that kind of stuff unless you're serious. All is safe here. We got very lucky with the hurricane, so very happy with that. You think the insurance companies are going to share for earnings? Yeah, and you know why that is. So a lot of people think insurance companies lose money when there's a big catastrophe. Well, they actually hedge those bets. Have you ever heard of something called catastrophe bonds? Very popular with the wealthy, but you can participate too. You can basically profit from a catastrophe bond. You're giving them money, and it's an all or nothing play now. You're basically saying, in a year's time, there will be a catastrophe, or there will be no catastrophe. And if there is not, you do well. If there is, you lose your money. And I said that backwards. It's the other way around. And that's the way they hedge off what will probably be close to $50 billion worth of damages here in the States. I'm not saying that doesn't hurt their earnings. Of course it will. But you expect them to like, oh my gosh, that's a catastrophic loss. No, they use catastrophe bonds for that. It is a rather fascinating spin-off of risk. Yep. The rumor of Credit Suisse, we covered that yesterday. I actually shared that with you in a more, detailed way to explain that one because I don't think it's a big deal at the moment. It's a good headline, I'll give you that, especially as, thinking about the financial crisis back then and all that stuff. Yeah, I saw Disney back over 100. It's like anything else. You look, you could take anything, pretend you can't see the symbol. Look at it. It all looks the same, right? You can't tell you could see the symbol, but pretend you can't. So your argument on basically any stock that's done something similar is that this is the bottom. It's irrelevant compared to the stock. Today was not a day where one stock had a great day and then that caused a couple others to go and a couple others. Today was just solid, strong across the board. So there's no way to look at Disney and say that is unique strength. No, that's just index buying, people moving money back into the market. Yep. Sorry if I missed your questions there. Thoughts on Boeing? I know a lot of people are trying to get back on that. Their earnings are supposed to be like 25 times next year. I think it's a little bit of an overestimate, but if you're playing for the long term, it's like, okay, you got a discounted stock, really good projected earnings going forward. So you're expecting this to perform on both the technical and fundamental level. Yeah. Is Tom Brady getting a divorce? That's happening, huh? Whoa. Oh, man. No wonder he's a little messy out there, huh? He should have stayed retired, Could have saved the whole, yeah, she was like, that was how it was. Me or the game? And he's like, baby, nothing takes me away from the game. Should have went the Gronk route and just said, I'm out. He retired, right? He stayed the course, too. Good for him. Wow. Yeah, that's as much as I can say about sports. I was like, I'm right there, Wow. Hopefully yeah, well, they're both wealthy, right? I mean, she's got more money than he does. Oh, okay. Wow. Wow. Yeah, his family is the Bucks, at least for this year. Then he's going to retire and be all by himself now. That sucks. Tough one. That's a tough one. We'll end it on that because I really have no other words to share there other than Cowboys 3-0, right? They will. 3-1 from the, yeah. Yeah. What's up? I knew they won 3. It's 3 in a row, right? Shoot. See, isn't that funny? Like the things I could rattle off about all this, and then I'm like, what? He moved to the Jets? Like I have no idea. All right, let's wrap it up there, man. It's getting off track. You guys enjoy the rest of your day. Thank you so much for hanging out. Hopefully you enjoyed the lessons today. Sorry if they were a little over your head, but it gives you some homework to do for tonight if you want to learn more about backwardation and contango. Very interesting. That doesn't happen very often, what we talked about. All right, adios. See you later.